Good afternoon, ladies and gentlemen. So, I think I've covered Smith & Wesson once or twice before on the channel, and it's no secret that I really like this company for a lot of different reasons. I tend to really be a fan of companies that have stood the test of time. Granted, the fact they've been around a long time doesn't necessarily mean that they'll be around forever. However, there's something to be said for a track record of enduring a lot of the ups and downs in the world, in the economy, and in the market overall, and coming through and still existing as a going interest. It provides you a certain sense that the company can be adaptable, or that it has a certain amount of durability to it. And honestly, a company like Smith & Wesson, the smaller market cap of only about $500 million, combined with its reasonable multiple, makes it pretty easy to understand and see the value on the table. Their financials don't feel all that difficult or intimidating to look at, and there aren't quite as many moving bits and pieces as with some of these mega cap companies that are out there today, with all of their AI, ChatGPT, blockchain technology, and such, that normal folks like us just don't quite grasp the way we maybe ought to if we're going to be putting a lot of money into them. So, Smith & Wesson is also announcing earnings like right around nowish, I think. So I think that earnings call is actually still ongoing at the time of filming. So I'm not really going to get into the earnings since that hasn't released yet. Just happens to be timing, I suppose, on that. But when it comes to the financial performance of Smith & Wesson, one thing that's important to remember is that this is a cyclical business, okay? So there will be up years and down years. A lot of the times when something like fear or whatever is at its highest, their core product, which is guns, well, sales tend to go up. Firearms, purchasing firearms and ammunition, etc., gives people like a sense that they're safer, and so they tend to do so during times of any kind of fear or uncertainty or perception that there's like political turmoil, etc. Or if they get the sense that, like, for example, certain types of guns might be outlawed, they have this sense that there's like this urgency to go stock up. It's a lot of kind of psychological stuff, and it's not like incredibly, predictable in the long run. You might be able to, in the short run, say if this happens, their sales might go up. But all in all, it's just suffice to say that over long periods of time, there will be ups and downs, and somewhere in the middle is kind of the average. So you see it on the top line with revenue, you see it on the bottom line with the EPS, right? And you see it with the free cash flow as well. Now, one thing I want to point out is that the dividend is a new addition, and they have stated in previous reports a commitment to continuing to grow that dividend. Also, when it comes to shares outstanding, on net, they have bought back a pretty substantial chunk over the last 10 years. There have been some where there was like a net increase that was quite small, but recently buybacks have been a big portion of the value they return to shareholders. And last I saw, their balance sheet had no debt and a pretty substantial assets, so they have a really solid, positive, tangible book value in addition to the stream of cash flow that they provide to their shareholders. And when you look at a discounted free cash flow, based on the EPS number, since they had a big capex, I think, moving their headquarters, if I'm remembering correctly, which made the free cash flow number temporarily negative, which means we can't use it really as a starting point. So, assuming EPS matching the trailing 12 months of $1.31 per share with zero growth, assuming zero growth. Remember, because it's cyclical, that's why I'm making that assumption. I don't think this is a business where you can say, well, they're going to grow, 3% a year for the next 10 years, et cetera, et cetera. Now, I think with the buybacks, there's a pretty good chance that EPS could, on the average, grow over the next 10 years versus the last. But I don't know this for a fact, right? In fact, I actually calculated the averages. Basically, I added up the last 10 years of EPS, divided it by 10, came out to an average of $1.60 per year. So we're starting at the trailing 12 months, which is lower than the average of the last 10 years, as our conservative starting point, assuming 0% growth, giving credit for that tangible book value since they have a solid balance sheet with no debt, etc. I think that it's pretty reasonable to give them credit for that. But we're also applying a discount rate of 12.5%. Because if we're going to take on an individual company, even one with, the history and, strong balance sheet at low multiple like Smith & Wesson, we still want an above average return, even when making conservative assumptions. And with that, we come out with a fair valuation of $17.15. Now, in one of my accounts, I do have a position where I started getting assigned shares in the $17.50 range, which, according to these numbers, would still be like a decent valuation over the long run. But in the main value portfolio that you all are familiar with, the Big Mama Jamma one, the shares in that have all been assigned somewhere between $10 and $12.50. So it's something like an 11 something cost basis in there. So across multiple accounts, we have a cost basis that is pretty far below this fair value number that we came up with these assumptions, again, that I consider to be very conservative for this company. So this isn't saying, necessarily that this investment's right for everybody, but I do think that when they're at a pretty low multiple, that if they, put some of their cash towards buybacks, continue to grow that dividend, and continue to, avoid a lot of debt and other things like that, that this company can be a very solid value for shareholders. And I, for one, am pretty happy to have some shares of this sitting around in some of my accounts. And, I look forward to seeing what the next 10 years holds for this company. Now, if you happen to have shares of Smith & Wesson, let me know in the comments below. Also, tell me what company you have in your portfolio that is the oldest, meaning the earliest date of founding. I think that's a really interesting thing to look at in a business, because it can show you, hey, they survived the Great Depression, they survived World War II, they survived Vietnam, they survived 9/11, etc., right? So that can be an interesting thing to think about for different businesses. Also, hop on Discord if you're not already on there. I'll leave a link in the description below. Like the video if you liked it, dislike if you didn't. However, if you didn't, what are you even doing watching at this point? Take it easy, everyone. Have a wonderful afternoon, and stay safe. Don't do drugs, and I am outta here.